What's up everybody, welcome to the Stocks channel. My name is Corey and today we did see a relatively bullish day in the stock market after a volatile sell-off opening gap down. Does this mean the correction is likely coming to an end? First up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, so today we did see SPY going up 0.42%, even though we did have a very volatile gap down open. So we did open the day with a gap down very close to that support level right around 429. And yet again, we see that support level holding up in a very bullish looking candle. Now this candle today doesn't fully engulf yesterday's high, but you can't look at this candle and see anything other than a very bullish looking candle. We closed near the high of the day and we're back over that critical resistance level at 433.5. So we did see the bulls take out one of the very critical resistance levels that the bears needed to protect. Now it's still way too soon to say the bulls are winning for sure because the bulls still need to get a decisive breakout above 436. And above 436, we still have the 50 EMA at 439. But do not forget there is a gap to close right around 442. And if the bulls start gaining traction, they will very aggressively go for that gap close because once that gap closes, the bulls could take control of this market yet again. And the price action will be back over the 50 EMA. So the bulls can use that as a very critical support level. And we could see the bears go back into hibernation once again. Now, don't just think the bears are going to give up that easily because we do have the 20 simple moving average crossing below the 50 EMA. So we will have the full bear trend and we will have plenty of resistance levels for the bears to short at as the bulls try to break back above key resistance. So by far the most critical resistance on SPY going into tomorrow's trading session will be 436. And above 436, the bulls are starting to gain a lot more traction and we can see that we are going up on increasing volume. So the sellers are disappearing and we're starting to see buyers stepping in. So this could be the very early stages of another bull rally. And if we do start to break through more resistance levels, we will know the price action is confirming our thesis that we may have possibly seen the bottom in this pullback or this correction. And we're getting ready to go into another bull cycle. So don't get overly bullish while we're in a downtrend, but the price action is doing all the talking. And right now you can see that we've had 1, 2, 3, 4, 5 touches on this support level at 429. And we continue to see buyers time after time stepping in at that level. And I always tell you that price action is king. You can't see a support level holding up for this long and think that that is not a bullish development. There is clearly buyers at that level and there is clearly price action that cannot break through that level. So the bears can't send SPY below 429 and can't get a decisive breakdown below that support. So if we can't break below 429, you don't need to be looking way down here at 411 or 419 or even 425 for that matter. So like I always tell you, let the price action do all the talking. And right now the price action is telling you that this market wants to go back to being bullish. And that's why we have a strong bounce off of a critical support and a strong decisive breakthrough through a critical resistance. Again, price action is doing all the talking. And we're letting the price action take the most weight because the price action is king. We do have a bear trend developing, but as long as the price action is holding above critical support, you can still have bullish price action even though you have a bearish trend. So if the bulls break out above 436, look for resistance at 439 and the gap close right around 442. And we still do have resistance at 441. So that will be a very strong zone of resistance. To the downside, we now have support at 433. 429 and 425, and below 425 you're looking for 419 and then 411. Again, don't pay too much attention to those downward support levels as long as 429 is holding up. On the NASDAQ 100 triple Qs, we were up 0.64% today, and again the price action is doing all the talking. We retested that critical support level right around 354, and lo and behold we saw a ton of buyers stepping in at that level, and we had a very bullish looking candle taking out yesterday's high, and again we're going up on increasing volume. So we're going up on increasing volume, taking out yesterday's high, and bouncing off a very critical support level yet again. We practically have 4 touches of this support level for 4 days in a row, and 4 days in a row holding up above that support level. So this support zone right around 352 to 354 is proving to be very strong, and we are seeing buyers coming in at that level. So this is no doubt bullish price action at this support level down here. But if we do lose support at 352, you still want to look for those next legs lower at 347 and 342. Again, don't just assume we have to break down and go to 347 if we can't see the price action even breaking down below 354. Let the price action do all the talking, and right now the price action is bullish off of that support level. The critical resistance levels I want you to pay attention to will be 360, because above 360 we're very likely going straight back up to 365, and if we can break 365, say goodbye to that gap around 368, because the bulls are going to blast right through it. Now once that gap closes, the bulls are either going to continue running this thing all the way back up to the previous resistance level around 376, or we will see another final stand by the bears to drive the market down for another leg lower. We'll cross that bridge when the time comes, but right now the price action is looking bullish. And don't forget about this beautiful textbook ABC structure, which could be telling us that the stock market correction is likely over, and whether or not you think we corrected enough is your bias. If the price action is saying we corrected enough and we're going back on the bull, let the price action outweigh your bias, and whether or not you think we needed to correct more or go down for another leg lower is completely irrelevant. Price action trumps all biases, and right now the price action is still looking bullish. We see a price action close back above the 5 EMA, and if you look at the 5 EMA, it's now positively sloping. So whether you like it or not, the bulls are starting to take over at these support levels, and the bears could eventually give up, and we could see the bulls start to take back over. So watch critical resistance at 360 and 365, and the gap close at 368. And the critical support will be 354 and 352, and below that look for 347 and 342. If I switch the triple Qs over to a 1 hour chart, you can see this very clearly, that we're starting to break the neckline of this inverse head and shoulders pattern. We have a left shoulder, we have the head of the inverse head and shoulders, and we clearly have a right shoulder developing, and we're starting to break this neckline, which is right around 359.6. So if we see the triple Qs breaking out and completing this inverse head and shoulders pattern, we could easily come up here and close this gap in a heartbeat. So this is a bullish pattern going in the opposite direction, because this is basically a pattern that shows a trend reversal. We had a lower low and a lower high, and now we're starting to see a higher low and potentially putting in another higher high, which tells us we could be seeing the trend shifting from a downtrend back into an uptrend. So this is the very early stages of what could be another bull rally, and you have to remember we are still in a downtrend, but this could be a very early sign that we're ending the downtrend and going back into an uptrend. It's way too soon to know for sure, so watch that key resistance level right around 360, because if we continue to close above 360, this will be a valid inverse head and shoulders, and that could easily send us up there to close the gap at 368. Jumping over to the Dow Jones, we were up 0.29% today, and again we see the Dow Jones holding on to that key support level at 339, and you can see how many touches we've had at that key support level, and we continue to see buyers stepping in at that level. The price action is back above the 5 EMA and the 13 EMA, and if we can see the Dow Jones closing the gap at 348, we could start breaking out and we could break the bear trend. Right now the Dow Jones is still in a bear trend, but like I told you, price action is king, and the price action cannot break below 339, so there's no reason to get overly bearish even though we do have the bear trend. Price action outweighs the trend, and we could easily reverse the bear trend if the price action can break through key resistance at 348. We still have support at 341.8, 339, and 336.76, and below that look for the gap close at 332. On the Russell 2000, we were down today, going down 0.52% today, and we still see the small caps that can't catch a bid, and the price action is back below all the moving averages with a full bear trend. Price action still above support at 219, and we're still within this consolidation wedge. But if Russell 2000 breaks below 215, it could easily see the floor fall out, even though we still do have support at 212. If we lose 212, look out below because we're going much lower, and we really need to see the bulls breaking out above 227 to send the Russell 2000 back into a bull market. The trend is bearish and the price action is bearish, but we are holding up above that support level at 219, so watch that support level closely. Key resistance will be 222, 224, and 227. On the Arkk ETF, we were up 0.83% today, and we see Arkk closing right on top of the 5 EMA, and we still do have the full bear trend. And don't forget, in the Arkk ETF, we did have the confirmed double top, and we did break the neckline. So the confirmed price target is way down here at 102, so this could be a sell the rip and get ready for another dip as we go back to the price target at 102. If we can break back above 115.5, the double top price target is canceled out and invalidated, and we could get back on the bull. But as long as we're below 115.5, the price target on Arkk is going to remain at 102 because we do have the confirmed double top. On the VIX, we were down 1.41% today, and we are starting to see the VIX getting crushed a little bit, and we do see the VIX still in a bull trend. So we definitely saw the VIX trying to spike out, getting back above 24, but getting crushed all the way back down to 21. But remember, as long as the VIX is above 20 and in a bull trend, and we're still on a confirmed downtrend in the indices, you still have to remain cautious. Now, if you see the VIX closing below 20 and breaking down below 18.2, that is by far an extremely bullish indication, and that's something I'm paying close attention to this week as we continue to bounce off support. If we see the VIX crush below 20 as we continue to break through resistance levels, we could be back on the bull and going back into another bull cycle. As long as the VIX is above 20, stay cautious, and we could still have more downside. On Bitcoin, we're currently up over 7%, and like I've been saying, I do think Bitcoin is a leading indicator for the stock market, and we already did have a very nice ABC correction in Bitcoin, and we're starting to get a very nice impulsive rally. We're taking out that daily high at 52,700, which does tell us this is the real deal breakout. You cannot get a very impulsive move like this on increasing volume, blasting through two resistance levels without saying that this is a bullish impulse. We're very close to having the full bull trend, and our price target is way up here at 59,000. So Bitcoin is by far a great measurement of risk on sentiment. And if Bitcoin is going risk on, there's really no reason to believe that the stock market is not one step behind. Remember, Bitcoin trades 24/7 and the stock market does not. So any price action we're witnessing in Bitcoin could be a leading indicator for what the stock market is about to do. We already know we have a beautiful ABC correction in the triple Qs, and now we're seeing it playing out in Bitcoin. So I do think this is hinting that the stock market is about to go back to being bullish as well. Look for that strong resistance on Bitcoin at 59,000, and above that, your next price target is 67,000. As long as Bitcoin is above 45,000, you want to stay on the bull, and you never know how high Bitcoin can go, so you're much better off just riding the wave. On Amazon stock, we were up 1.27% today, and we see Amazon stock closing back above the 5 EMA, but we did get the confirmation of the full bear trend today. Right now, we're bouncing off support at 31.85, but I don't want you getting bullish on Amazon until we can break back above 3,300 and stay above that level. Above 3,300, I'm bullish on Amazon, and below 3,300, I think we could still come back down for another leg lower at 31.36. So in the bear scenario, we will get rejected at 3,300 and come back down to 31.36. And in the bull scenario, we should blast through 3,300, possibly reattempt to test it as support, and then close the gap at 34.52 and then close the gap at 35.80. Watch that breakout level, because as long as we're breaking out, Amazon could be getting back on the bull. Otherwise, look for that rejection and reattempt to test the lower support level at 31.36. On Tesla stock, we were up 0.28% today, and the same exact story on Tesla stock. We still have bullish price action with the full bull trend, and we need to break 800 to get to the price target at 825. Above 825, we're attempting to retest all-time highs, and we could even break out and go to brand new all-time highs. Your critical support levels are 765, 762, and the breakout level at 745. And as long as Tesla is above 732, you can stay bullish. If Tesla closes below 732, it could be rolling over and getting ready to go through a correction. On Apple stock, we were up 0.63% today, and we did see Apple stock closing back above the 5 EMA. We're still below resistance at 142.3, so we do need to break back above that level. We also have resistance at 145 and our resistance trendline breakout level right around 149. It does look like Apple could be snapping this downtrend, because we do see a really nice bullish breakout today, even though we did not close the gap at 137. Remember, there's no guarantee of when gaps will get filled, so it is possible for that gap to remain open. You'll know Apple is bullish if we break back above 146 and stay above that support level. On the financial sector, we were up 0.1% today, and again, we still see the financial sector with bullish price action and the full bull trend. The industrial sector was up 0.44% today, and we do see the industrial sector starting to break some of the bearish trending. We still need the price action to get back above the 50 EMA to break the bear trend. The healthcare sector was down 0.18% today, and we still do see the healthcare sector in a full bear trend with bearish price action, so it doesn't yet look like the healthcare sector is done going through its correction. The energy sector cooled off today, going down 1.05%, but we're still above all the moving averages with the price action, and we still do have the full bull trend. So jumping back over the S&P 500, we can definitely see a lot of bullish developments. Remember, price action is king, and right now the price action is telling us everything we need to know. We're holding above key support levels, and we did get a very impulsive bounce today, and we are starting to blast through some of these resistance levels. If we can get the VIX crushed back below 20 and break through some more resistance levels, we could start reversing the downtrend, and we could get back on the bull. So keep an open mind that this could be the end of the correction, and we might have already seen the bottom. We'll know that's not the case if we lose a key support level, so you still need to be cautious as long as we're in the downtrend and the VIX is above 20. Don't just think that this market is going to make it easy on you. There's going to be bear traps and bull traps alike, so make sure that you know your key levels and that you have a solid trade plan. Don't do any guessing and only buy at strong support and sell at strong resistance. And if you're shorting, only short at resistance and cover at support. Don't get sloppy in a volatile market or you will lose your shirt. Don't forget that I also do have my own trade alert service called BANC Trade Alerts that only trades TQQQs. And with the current market conditions, I think this is a great time to be a BANC member. I'm currently running a 50% off promotion code for your first month, so now could be the best time to try out BANC Trade Alerts. You can find out all of the details and how to join by clicking on the links in the description of the video. I also have the Stocks Channel Discord where I do intraday updates and analysis to help you navigate this volatile market and stay on the right side of the trade. If you're interested in joining the Stocks Channel Trading Discord community, you can find out how to join by clicking on the link below. So thanks for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.